Let us break down one of the most powerful yet often misunderstood indicators in Forex trading. The MACD, MACD stands for Moving Average Convergence Divergence. But don't worry, it's not as complicated as it sounds. By the end of this video, you'll understand how to use it strategically, not just visually, how beginners can build confidence with real trades, not just theory. So what is the MACD? At its core, the MACD is a momentum indicator built on moving averages. It's made up of three parts: the MACD line, the signal line, and the histogram. The MACD line is calculated by subtracting the 26-period EMA from the 12-period EMA. This measures the short-term versus long-term momentum. The signal line, usually a 9-period EMA of the MACD line, acts as a smoother. When the MACD line crosses above the signal line, it suggests bullish momentum. When it crosses below, bearish momentum. Then there's the histogram, the visual bars that rise and fall. These show the distance between the MACD line and the signal line. Think of it as the energy behind the trend. If the histogram is rising, momentum is increasing. If it's shrinking, momentum is weakening. Sounds simple, right? But here's where most beginners go wrong. They treat every crossover as a buy or sell signal and ignore market structure. Let me say this clearly. MACD works best in trending markets, not ranging or sideways zones. If you apply MACD crossovers during choppy price action, you'll likely get faked out. Here's how to use it properly, step by step. Step 1. Identify the market trend first. Before even looking at MACD, zoom out to the 4-hour or daily chart. Are we seeing consistent higher highs and higher lows? If yes, we're in an uptrend. If no, stay cautious. MACD needs that directional movement to work effectively. Step 2. Use MACD for timing, not direction. Let's say you confirm a bullish trend on EUR/USD. Now you drop to the 1-hour chart. Watch for the MACD line crossing above the signal line, especially when the histogram flips from negative to positive. That's your momentum confirmation entry. But don't rush. Check if price is breaking a resistance zone or bouncing from a key moving average. Like the 50 EMA MACD is the green light, but the price structure is the intersection. Step 3. Use the histogram to detect early momentum shifts. Here's the trick experienced traders use. Instead of reacting to crossovers, watch the histogram slope. If it's rising strongly while price is still in consolidation, it may signal a breakout before the crowd notices. Now what about exit strategy? This is where the MACD is underrated. You can actually use the MACD signal line as a soft trailing stop. For instance, once the MACD line crosses below the signal line and the histogram turns red, that SA sign momentum is fading. Doesn't always mean reverse, but it does mean watch closely or start scaling out. Want to filter even more false signals? Okay, combine MACD with RSI. If MACD gives a bullish crossover and RSI is crossing above 50, that adds confirmation. Both momentum tools are saying the same thing. Price is gaining strength. Still, let's be real. No indicator is perfect. The MACD lags because it's based on moving averages. So don't use it for scalping on 1-minute charts or expecting early reversals. That's not its strength. The MACD shines when you confirm a trend time into that trend, ride momentum using structure plus histogram flow. Let me give you a practical example. Let's say GBP USD is trending up. On the 4-hour, price bounces off the 200 EMA. On the 1-hour chart, MACD gives a crossover above the signal line and the histogram flips positive. That's a high probability continuation entry. You enter with a stop below the last high or low, target a new swing high, and manage the trade using the histogram shrink or divergence. And yes, MACD divergence is another powerful tool. If price makes a new high, but the MACD makes a lower high, that's a warning. Momentum is fading. Institutions use divergence as an early sign of reversal zones. But again, context is key. Don't act on divergence alone. Always wait for a second confluence, like a candlestick pattern or a break of trend line. Bottom line, MACD is not just lines and bars. It's a momentum mapping tool, and when used properly, it gives you timing power that few other indicators match. But if you want to go beyond basics, to build MACD systems with real-world win rates, use it in back-tested Forex strategies, and integrate it with tools like ATR and volume, that's where we come in. Join Innohedge today and unlock our full MACD blueprint, including multi-timeframe strategy guides, risk management overlays, and access to real backtest reports. We don't just teach MACD, we build trading systems around it. 'Cause at Innohedge, we believe in smart traders, not lucky ones. Let's grow your edge together.